So we just heard Steve Leisman sum up what has been a historic week in terms of actions and activity by the Federal Reserve. Given the fact that we are seeing these moves and so quickly, whether it's repo operations, whether it's asset buying and quantitative easing, the cut to zero in interest rates a few days ago, I could just go on down the list. How is it impacting Huntington right now, and what does it mean more broadly for the financial sector?
Well, the banking sector has never been better capitalized and better positioned to be part of a solution here. So there are impacts. Branch lobbies have been closed. We've closed ours. Other banks have done that to try and moderate traffic flow and the risks to other customers and our colleagues in the branches. But the banks have largely worked around challenges relating to the virus in terms of dealing with our customers, using drive-ups, ATM, mobile, digital, other distribution techniques. So the immediate impact of the environmental changes, I think, have been largely absorbed and in a very strong fashion by the industry. Beyond that, there's clearly going to be an impact in terms of lower spread revenue because of the interest rate changes by the Fed, and these unemployment figures will clearly mean customers are going to need support. And this is where I think the industry, being well capitalized, can come in. I think there's a role for banks to play with providing support to consumers and small, medium-sized businesses in particular. And for example, we have put a 90-day payment deferral for principal and interest in for consumers impacted by the virus, as well as small, medium-sized businesses. And we're seeing an uptake already on that, and that's only been out for a couple of days.
Wow.
There are other things we can do as an industry, waiving late fees, the moratoriums on foreclosures, repossessions, a host of things, just to try and stabilize the environment. So I believe, will be a force multiplier for the Federal Reserve and the actions they're taking. And as the fiscal elements come into play, that will serve small, medium-sized businesses in particular very well, assuming we get the funding mechanisms so that the flows happen quickly, and the same with the consumers.
Okay. I'll definitely want to dig into that piece of the puzzle a little bit more with you. But first, just given the fact that you did take over at Huntington, you took the helm in 2009 in the midst of the financial crisis. And, of course, the last time we did see a recession, it sounds like, and tell me if I'm right, it sounds like you're saying that there have been lessons learned by both the government and the industry from that situation that enables a bank like yours to be in a much stronger position to be able to react and help consumers, help small businesses, et cetera, in a much more meaningful way today.
I absolutely believe that the banking system is almost capitalized at a 2x level from where it was in 2009. Certainly that's the case with us. So we're collectively, we're in a position to be constructive and supportive. And as soon as we work through the curve, the duration of the curve becomes known, there's a resiliency that I think the banks can play a major part in helping businesses get back on their feet.
So in terms of the fiscal response that we have seen from the federal government so far, and I realize a lot of this is rolling out in phases, has it been fast enough? Has it been targeted enough? Will it help your clients, be it businesses or be it consumers, enough?
Well, it's still in process. The large bill is still pending, and it has, I think, many of the right elements to be very helpful. But the distribution of proceeds, the timing of that will be important, and how the funding for the SBA ultimately gets translated into helping these small businesses that need support in the near term. And I'm optimistic all of that will work on a very timely basis, but that remains yet to be seen. So speed is important here. The sense of urgency appears to be in place. The bipartisanship seems to have subsided substantially, so that things are now getting done. I'm optimistic that we'll flow into next week with the opportunity to start helping people and small businesses.
And of course, you've been implementing some of these social distancing measures within your own banks and among your own employees and in terms of interactions with some of those clients. We've been talking a lot about FinTech in general in recent months and the adoption of technologies by banks like yours. What is the role that is playing to help Huntington Bank navigate through a crisis like this?
Well, this is very important. We have a lot of capabilities in our mobile and digital world and our ATM uses. The majority of our deposits flow daily through those other channels as opposed to a historic teller. And we've made tremendous investments as a company. We were J.D. Power #1 nationally last year on mobile and internet. So we're very well positioned. We're the largest SBA lender in the country by volume. We're very well positioned as a company to be part of the solution, and we're clearly interested in doing that. But I also know my brother and CEOs of the different regional and community banks are clearly lined up with the same intent.